let's get more on that. And with out of control potential government spending and Australia facing some economic headwinds, how does all this impact the housing market and buyer behaviour? Anthony Landahl from Equilibria Finance joins me now. Anthony, good to see you.
Nice to be here.
Since we last spoke, a rate hike, potential hiking cycle. The housing market's still pretty hot, but what are you expecting?
Yeah, I think at the end of last year, a lot of economists were forecasting 2 or 3 rate falls this year. That's all turned around in 2 months on the back of inflationary data, unemployment data, and essentially a strong economy. And first RBA meeting of the year, obviously, as we all know, we had that first rate increase. Look, I don't think initially that's going to have a lot of impact on the market. Obviously, it impacts existing borrowers. It does impact serviceability capacity. But I think with our fundamental supply constraint, what it might do is shift the market into more affordable areas, shift some buyer behaviour into areas where their borrowing capacity might be able to buy a property, but it also might bring into the market more investors in terms of some of those regional markets as well.
You know, I got to say, I don't know where anywhere isn't affordable in Sydney. I've been widening out my search as well, and it's just crazy out there. So, as you say, potentially buyers look elsewhere, but are they still in demand? Are you still seeing people wanting to go out there and buy?
Yeah, well, a lot of the government policy has been demand driven. We've obviously seen the first home buyer schemes, the first home loan deposit scheme, the shared equity schemes had a lot of take up as well. That's been keeping first home buyers in the market. They might only need a deposit of 2 to 5% to actually get in the market, and that's one of the biggest challenges. So we're seeing the less affordable markets with strong growth. We're seeing the less affordable markets with weaker growth, but the more affordable markets are having very, very strong growth as first home buyers shift to those, and a lot of investors are looking in those markets as well. That's keeping demand strong. And whatever our supply constraints remain, we're always going to have that imbalance. The government housing market scheme to build 1.2 million homes was 60,000 homes behind last year, and it's about 80,000 homes on its forecast. So supply is not catching up. We're a long way behind on the federal government's initiative to build more homes. So while ever we got that imbalance, the rate of growth might slow in the market, but we're still going to have a strong housing market.
And just tell us where we're at coming into 2026 and where I guess the growth areas or the hotspots are.
Yeah, 2026 we had the rate of growth slowing a little bit, just on the back of affordability constraints. I think this first interest rate rise will have a little bit of an impact on what borrowers can do. I think if we get subsequent rises, 2 or 3, that might start impacting the market, and we might see the rate of growth slowing more. But what we were seeing was really strong growth in markets like Darwin, Perth, Brisbane, where they're more affordable still, but they're catching up. The Sydney median house price is now around about $1.7 million, so
Insane.
People just cannot get into that market.
But Brisbane, you mentioned there, I mean, that is getting very unaffordable too, particularly leading up to the Olympics.
Yeah, that's had some of the strongest growth. It grew about 15% last year. A lot of people seeing that as an attractive area because of the Olympics. There's been a lot more greenfield sites open up there, but Perth and Brisbane and Adelaide, particularly over the last couple of years, their median house prices have grown very strong, making some of those areas become almost unaffordable as well.